This is a review of Comprehensive Problem 5-1 from your CNOW assignments, and it's going to help you prepare for the Chapter 5 tax return exam. Our taxpayer in this problem is Anthony Stork, born in 1981, which makes him about 44 years old. He's filing single, and he has a W-2, a 1099 INT, and a 1098. Anthony also received a supplemental report reporting his tips and overtime. Remember, this is the first tax year that the tips and overtime are not taxed, so these figures are provided so that they can be deducted from income on Schedule 1A. Anthony pays alimony to his ex-spouse. The divorce was signed February 12, 2020. We learned back in Chapter 3 that divorces that occur after December 31st, 2018 have no tax consequences. Therefore, we don't have to worry about recording a deduction for the amount of alimony that he paid. But just a side note about alimony. Notice that it says the alimony would go from $3,900 a month to $2,800 a month once the child reaches age 18. That tells us that the alimony is actually only $2,800 a month, and child support was the other $1,100 a month. Some divorce decrees are worded in that manner to try to disguise the child support payments as alimony so it can be deducted. Since neither the alimony nor the child support have tax consequences, we're just going to set that information aside. Anthony purchased a new car, and he kept track of his sales tax receipts during the year. His actual sales tax was $41.34 for the car and $18.17 for all other purchases. So instead of deducting state income tax, he'll be deducting state sales tax on the Schedule A as an itemized deduction. Taxpayers can either take their actual sales tax or get an estimated amount to deduct from the IRS using the sales tax estimator on the website. If a taxpayer uses their actual sales tax as a deduction, then they must keep up with all their sales tax receipts. Anthony also participates in a high deductible health plan. Taxpayers sometimes purchase these types of plans to save money because the premiums are typically lower. Taxpayers with these types of plans are able to contribute to a health savings account and use the money that they save to pay for their high deductibles. During the year, Anthony contributed $3,300 to his health savings account, and it earned $86 in interest. And here we have a list of other potential deductions, and we'll come back and look at these more closely when we start the Schedule A. So now it's time to get started with our 1040. I've entered Anthony's name and social security number at the top, along with his address. His filing status is single. He lived in the United States the entire time, so we're going to check the box. And he did not wish to contribute to the presidential election campaign. He had no digital asset exchanges to report, and he had no dependents. So let's go over now to his W-2 so that we can report his earned income on line 1A. So Anthony had wages, tips, and other compensation of $82,900. So we'll enter that figure here. He had also a 1099 INT where tax-exempt interest of $12.12 is reported and interest income of $38.55. So on Line 2A will enter the tax-exempt interest of $12.12, and on 2B we'll enter the taxable interest of $38.55. Now I think that takes care of all of Anthony's income, so we'll bring the earned income figure down to 1Z. Then calculate the total income on line 9. So the 82.9 plus the 38.55 will give us total income of 86.755. Now we can start working on Anthony's adjustments to income. Adjustments to income are reported on Schedule 1. So let's get over to our Schedule 1. Remember to include the taxpayer information at the top of each supplemental form to avoid losing points. On Schedule 1, additions to income are reported here in Part 1 on page 1. Deductions from income are reported here in Part 2 on page 2. We had one deduction from income, and that was the $3,300 he contributed to his health savings account. Let's go back over to the instructions and look at exactly what it said about that. It said that Anthony participates in a high deductible health plan and is eligible to contribute to a health savings account. His health savings account earned $86, and we'll come back to that in just a minute. But if we come down to the box, we'll see his contribution amount of $3,300. Now the $86 is not included in income, so we did not place that with the interest on Form 1040. That is going to be tracked on the 8889 that we're going to now complete. Here's the 8889, and we have the taxpayer information listed at the top. Line 1 says check the box to indicate your coverage under a high deductible health plan. It's only Anthony. He's not married. He's only covering himself. On number 2, we're to enter the HSA contribution made for 2025. So we'll enter the $3,300. On line 3, it says if you're under age 55, and remember earlier we calculated that he was 44, on the first day of every month during 2025, you were or were considered an eligible individual with the same coverage. Enter 4,300. On line 4, enter the amount you and your employer contributed to your Archer MSA. Well, we don't know what that really is right now. Line 5 says subtract line 4 from 3. So we'll bring down the 4,300. And on line 6 it says enter the amount from line 5, but then has some stipulations about you and your spouse. We know that he's single, so we'll bring the 4,300 on down. On line 7, that applies to individuals who are over 55, so we don't have to put anything on that line. In line 8, we're going to add lines 6 and 7 and get the 4,300. Line 9 wants us to report the employer contributions made to your health savings account. Well, we've got to go to the W-2 to see if there were any contributions made. So we'll scroll down a little bit and we'll see some information in boxes 12A and 12B. 12A reports retirement information, so we are not concerned with that. But 12B, with W indicated as the code, is reporting the amount that his employer contributed to his health savings account. So here we have the 1,000 that we need to report over on line 9. There were no funding distributions, so we're going to add line 9 and 10 to get 1,000. And we're going to subtract line 11 from line 8 to get the 3,300. So his health savings account deduction is 3,300. So we can simply move this figure over to his Schedule 1. So here on line 13, we'll enter the 3,300. This is going to be our only adjustment to income. So we'll bring the figure all the way down to line 26. And we'll move this figure, the 3,300, over to line 10 on our 1040. And now we can calculate the adjusted gross income. The 86,755 less the 3,300 will give us adjusted gross income of 83,455. And we'll go ahead and move that on over to page 2 on 11B. No one can claim Anthony as a dependent, so we don't have to mark anything there. He doesn't have a spouse, and he was not born before 1961. So now let's start working on his itemized deductions. Once we get his itemized deductions on Schedule A, we're going to compare them with the standard deduction for a single filing taxpayer, which is $15,750, and we're going to take the higher of the two figures. So let's look at Schedule A. We have Anthony's information up at the top. Now we'll look at the Schedule A section by section. The first section is for medical and dental expenses. Anthony didn't have any of those, but it's important that you know how to complete this section because you're going to have to do it on your tax return exam for Chapter 5. First of all, you have to know which medical and dental expenses are deductible. So go back to your PowerPoint and your textbook to make sure you know which medical expenses are deductible. The amount of the deduction is based on the taxpayer's adjusted gross income. A taxpayer can only deduct the amount of medical expenses that exceed 7.5% of their adjusted gross income. So for example, if a taxpayer had adjusted gross income of $100,000, which we would enter here on line 2, then 7.5% of that would be $7,500. And before we can take the deduction, we're going to subtract the $7,500 from our medical expenses to get our deductible amount. If our medical expenses are not higher than the $7,500, then we get no deduction. So now let's take a look at the state and local taxes. On line 5A, a taxpayer can deduct state and local income taxes that were paid in, which would be reported on the W-2, or they can choose to deduct the sales taxes that they paid during the year. I remember that Anthony had no state and local sales tax, but he did have sales taxes that he wanted to deduct. Most people do not keep up with the amount of the exact sales tax that they pay each year. If they did, they would have to keep the receipt for every single purchase. The IRS helps out by providing a sales tax deduction calculator on its website. It takes the taxpayer's adjusted gross income and some other information and calculates an estimated deduction for you. Now, Anthony says that he kept up with his exact sales tax paid. The instructions here say that he paid $41.34 for the purchase or tax on the purchase of his car, and then $18.17 for all other purchases. So his total sales tax deduction is $59.51. So let's get that in there. State and local sales tax, $59.51. Now he also paid real estate taxes. In the box here, we see that he paid property taxes of $31.45. So on 5B, we're going to enter the $31.45. And we're just going to total up all of his taxes. And we'll get $9,096. On line E, it says enter the smaller of 40,000 or 9,096. Now, line E last year was just 10,000. It was much lower. So the IRS is allowing more state taxes to be deducted. But he only paid in 9,096. So there are no other taxes to list, and we'll bring the total over to line 7. The next section we'll look at on Schedule A is the interest paid section. Pretty much the only interest that you can deduct in this section is for home mortgage interest. If you acquire a home, then the interest you pay on that acquisition mortgage is deductible. If you get a home equity loan, you can only deduct the interest if you use the money to improve or remodel your home. Anthony did have a 1098 reporting his mortgage interest. So let's go back and look and see how much he paid. The 1098 is a mortgage interest statement, and in box 1 it says that he paid interest of $2203, and the loan was for $54,000. So we're going to enter the interest on line 8A. We'll bring the total down to 8E and then transfer that over to line 10. Before we go any further, let's go back over to our instructions and look to see what other deductions Anthony has listed. In the box we have credit card interest. Unfortunately, credit card interest is not deductible for your tax returns, so we'll just ignore that. An auto loan interest on the new Mustang he bought. Now, in the past, auto loan interest, which is considered personal interest, has not been deductible, but there was a change for 2025, and on form, I think it's Schedule 1A, we're going to be able to take a deduction for the auto loan interest. So we'll come back to that later. Auto insurance is not deductible. We've already taken care of the property taxes, the HSA deduction. Income tax preparation fees are not deductible. In the past, they have been under a miscellaneous deduction, but not anymore. And then we have charitable contributions. We have to the Boy Scouts, St. Matthew's Church, and the Nevada Democratic Party. While the donations to the Boy Scouts and to St. Matthew's Church are deductible, the donation to the Nevada Democratic Party is not, because political donations cannot be deducted on your tax return. After his inheritance, he made a $51,000 cash donation to the Stork School of Engineering, and he did have a letter that confirmed his donation. If there's a single cash donation over $250, the IRS requires a written letter from the organization that received the donation. If we add up all the deductible donations, the Boy Scout donation, the donation to St. Matthew's, and the $51,000 to the Reno State University, we come up with $55,400. But he may not be able to take all that because a taxpayer is only allowed to deduct charitable contributions up to 60% of his adjusted gross income. So we're going to have to go back over to the 1040 and see what the adjusted gross income is. Okay, on line 11A and 11B, it says that the adjusted gross income is $83,455. If I multiply that times 55%, I get 50,073. So that is the maximum that he will be able to take on Schedule A in charitable contributions. Now the difference, the 50,000 or the 55,400 less the 50,073, that's $5,327 he cannot take, but he won't lose that deduction. He can just carry it forward until the next year. So let's find Schedule A and enter on line 11 the $50,073. We'll bring that on down to line 14. Now it's time to add up all of our deductions. 9096, 2203, and 50,073. So the total down on line 17 is 61,372. And we're going to carry this back to the 1040 and enter it on line 12E. Notice that the standard deduction is only $15,750. His itemized deductions are way more than that, so we're going to take the itemized deductions. So a taxpayer can take one or the other, the standard deduction or his itemized deductions, and the itemized are much higher, so of course we're going to take the higher deduction. Now we want to look at the additional deductions from Schedule 1A. I've got the taxpayer's information entered at the top of the page. So we'll go ahead and start Part 1. And Part 1 is just asking for the modified adjusted gross income. And the modified adjusted gross income is pretty much just income from all sources. So we're going to enter there $83,455. There is no additional income to report from any of these forms on line 2, so we're just going to bring 0 there and bring the $83,455 down to line 3. Part 2 allows for a deduction for tip income. This is the first year that tips have not been taxable. So in order to find out the amount of his tips, it's probably normally going to be shown on the W-2, but as when this was created, the W-2 was not updated for qualified tips. We're told that Anthony's qualified tip income was $12,000. So we're going to come back over here and list $12,000 on line 12A. That is the only tip income he has, so we'll bring the total over to 4C. And then we'll add lines 4C and 5. 5 is for tips received in the course of a trade or business, not if you have an employer. We're going to enter the smaller of the amount on line 6, or 25,000. And then we're going to enter the amount from line 3, which was the adjusted gross income, 83,455. Enter 150,000 unless you're married. And then we're going to subtract 9 from 8. Oops, that's 150,000. Notice that you can't subtract 150,000 from 83,455. It says if 0 or less, enter the amount from 7 on line 13. So I would definitely get a negative number if I subtracted 150,000 from 83,455. So I'm not going to put anything on line 10. I'm just going to go down and put the amount from line 7 on line 13. Part 3 is for overtime pay. And just like in Part 2, where we're not taxing tips now, we're also not taxing overtime. So we are going to get a deduction for any overtime that's included in box 1 of our W-2. On 14A, it's asking for the qualified overtime compensation. So in our problem, it's telling us that the excess overtime is $3,400. And keep in mind, this is not the time and a half. It's just the half premium that's added to overtime pay. So we'll enter the $3,400 on 14A. There's nothing from the 1099, so we'll bring the $3,400 to 14C. On 15, it says enter the smaller of line 14C, or 12,005. And then we're going to enter the amount from line 3, which is our adjusted gross income. And then on 17, we're going to enter the 150,000. We're going to subtract line 17 from 16. And once again, we cannot subtract 150,000 from 83,455 without getting a negative number. So we're just going to enter the amount on line 15 down on line 21. So far we've got an additional deduction for tips, for overtime compensation, and now we are entitled to one more. That's car loan interest. And I think I mentioned earlier that car loan interest has never been deductible, but this year they are allowing a deduction for it. Going back to the instructions, we'll see that the auto loan interest was $29.40. And up here, we're given the vehicle identification number that's required for this form. So we'll go back and enter that information. I've got the VIN number already listed. It takes a minute to get that in there. And we're going to enter the $29.40. Now they're also asking how much you deducted on Schedule C, E, or F, and so because they don't want you to take the deduction more than once. So we don't have any deductions on C, E, or F, so we'll put that $29.40 over under Schedule 1A. Line 23 says to add lines 22A and B. And 24 wants us to enter the smaller of the amount on line 23, or 10,000. 25 says to enter the amount from line 3, and once again that's our adjusted gross income. And on 26, we're going to enter 100,000 since he's single. Line 27 says to subtract line 26 from 25. If 0 or less, enter the amount from 24 on line 30. So once again, we can't deduct 100,000 from 83,455 without getting a negative number. So we're going to go ahead and bring the 2940 down to line 30. Okay, he is not a senior. If he were over 65, he could get an additional $6,000 deduction. But since he's not, he's just going to get the 2940 from the car loan, the 3,400 for overtime, and then the 12,000 for tips. So he's going to get an additional deduction of 18,340. And we're going to move this figure over to Form 1040, line 13B. 13B is 18,340. Now we're going to add lines 12E, 13A, and 13B. So we'll come up with 79,712, and we're going to subtract that from our adjusted gross income. And our taxable income then is only $37.43. So those additional deductions and his itemized deductions have brought his income down from $83,455 all the way down to $37.43. Now that we have the taxable income, it's time to calculate the tax. So we need to go over to the tax tables and find his income range, $37.43, and under the single column, his tax is $373. He has no additional taxes, so we'll bring that on down to line 18. Again, down to line 22, and then on line 24 for his total tax. So now it's time to figure out how much he actually paid in. Let's see, go to the W-2. His federal income tax withheld was $74.02. And we'll move that to 25D. He had no additional payments or credits, so we'll just bring that on down to line 33. So he paid in $74.02. He only owes $373, so he's going to get a pretty nice refund of $7,029.